The Money Show. Personal finance.
Warren Ingram from Galileo Capital is turning Papa Bear on us because are you in the camp of firm believers of a ratings downgrade looming in December?
No. I'm not that person.
So you're deluded. No. There's a possibility of a ratings downgrade.
There's a possibility, and I think the more fund managers I speak to, especially the large ones that that have a big influence in where a lot of South Africa's investment money gets placed, more and more of them are positioned already for a downgrade. In their minds, that's the greatest chance. And so when money starts to move in a particular position, you need to take cognizance. Mm-hmm. However, as we've seen with so many things based on a prediction, you need to predict the event correctly, and I just don't know whether the ratings downgrade happens now. Does it happen in June? Does it happen at all? And then secondly, how do the markets react to that event? Because it might react in a way that you don't think it does. So the inclination right now from everybody that you'd speak to would say downgrade, disaster, everything falls apart.
But it's not. I mean, it's not comfortable and it's not good.
It's not good news. Correct.
Because a downgrade, and we've got to understand this, and we've got to make this clear, because it is so easy to, the mainstream approach to this is, we're going to be downgraded to junk. Now, let's say South Africa's got 100 rands worth of debt. It's chopped into bits and pieces. Some of it is foreign denominated debt. In other words, let's call it dollar debt. Just to make it easy. Simple. The rest of it is rand debt. It's money that is borrowed by public sector entities, by companies, by the country, locally. So big entities like Future Growth, for example, is rand-denominated local debt. Now, 10% of South Africa's total debt is
10 rand out of the 100?
Yeah, is dollar-denominated.
Yeah.
So what the rating is, where we are at risk of a downgrade in December, is on that 10%, on the 10 rand out of the 100.
Yeah.
Now, we don't want the downgrade. It must not happen because it's negative for the country.
It is negative for the country.
But it's not the end of the world.
Agreed. And I think the also to note there that the fear would have been that downgrade means that we don't get to borrow that 10 rand out of the 100 that we used to borrow before. And I think that's not true. We will still get to borrow that money, but we'll need to pay a higher interest rate. And the big fear would have been that this downgrade just says, sorry, you needed $100, but in future you're only ever going to get 90, and it's going to come from local sources. That 10 rand that we do need from international sources is critical to the flow of money in our country. So it's not irrelevant, but and it doesn't look like those taps will be turned off, but it is going to cost us more, and that is bad from an economic perspective over 3, 5, 7, 10 years, etc.
Okay, so now I'm sitting with my monthly unit trust payment. Let's say I'm putting 500 rand into a general equity unit trust, and then I'm putting 500 rand into a global unit trust, or I'm putting it into one of the DBX index trackers that's got global exposure, and I'm putting it into a local index, 1,000 rand investment every month. What do I suddenly take my 500 rand local investment and chuck it all into the global index tracker? How do I treat this event investment?
And I think this is the critical point here. A lot of people are assuming that the rand will just fall out of bed on a one-way slide, and that our stock market will just fall out of bed on the same basis. And I think that's not necessarily accurate. The likelihood is that the rand and our market will react badly over a very short period of time. And I think our good parallel would be something like how markets reacted in the UK after Brexit. It was bad news. The markets took a shock. I think it would be even worse in the Brexit case, because they were massively surprised. Here we can't say we would be massively surprised. It's going to be something that sort of happens, and so what will happen is most likely we'll get a knock and a drop in the short term. Over a longer period of time, the sword that's been hanging over our heads as a country is now done. Whatever that bad news is, it's happened. So now we have some certainty, and one thing investors like is certainty.
But it depends also on the quality of the downgrade. So, I mean, there's a downgrade, and then there are 50 shades of downgrade almost. Because if you then downgraded to, and I just wish they'd make it simple. Yeah. But there's A, B, B, A, C, D, D, G, 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 F, F, and it's just bleh. You can be downgraded to what they call sub-investment grade, but on a negative outlook. And then the uncertainty persists.
Or you could be on a stable outlook.
Yes.
And I think that's the point, is because now they're saying we don't expect you to run at 100 miles an hour, we expect you to run at 50 miles an hour, and as long as you can run at that 50 miles an hour, then we maintain a stable outlook for you. So we just don't know, and I think that's the point. So I haven't ignored your question, I'm coming back to it now.
I was waiting.
So my view is that's a smart way to diversify your investments already, what you've done now. That $500 local, $500 international, and I wouldn't stop the debit order in either way. In other words, I wouldn't stop all the local money and then send it all into the international one, because we could be sitting here in 12 months' time and the rand could be stronger. It feels like already the last couple of days the rand's starting to strengthen again, despite all the stuff that's going on around us. So I think that's one point. And then the second thing is the international economies and international markets aren't in a great space either. And so what you might well want to do is stick to that course of action that you've got, the good split. And to me, that's a really sensible way of splitting your money. But don't go and put everything into one direction or the other.
There will be some people who will say, oh, there's uncertainty, I'm going to stop the debit order.
And I think uncertainty, what it does do is it gives you an opportunity to buy quality assets at a better price than you could get them a little while ago. Because if the markets do react badly, and we do see a big drop, over a short period of time, I would be tempted to actually start piling in a bit more than what I would have done before. We still have great quality companies in this country that don't just operate in South Africa. They operate in Africa and they operate globally. So if you can get those great quality companies at a much better price than you could 3 weeks ago, because this downgrade happens and because the markets react in a very emotional way, then to me that's the time to take advantage of people's panic.
Shall I tell you why there is a very high risk of a ratings downgrade in December? It's encapsulated in a headline on fin24.com this evening. Just click there, just have a look. Their lead story at this very moment is Treasury uncertainty risks confidence, Moody's. And talking about uncertainty about the leadership of the National Treasury and political infighting are eating into investor confidence. That is the warning from Moody's. We know it is a reality. We can deal with it. But foreign investors are a little bit more jittery than us. My guess is they'll look for reasons to not downgrade us. But unless we get our political ducks in a row, we do run a risk that is higher today than it was a month ago of a December downgrade.
And it's
time to pull it back.
It is time to pull it back. I think, our October budget, we all desperately need to hope that it's delivered by Pravin and that it's the normal kind of budget that we would expect. That sends a very good signal. And I think the confidence in this country can turn as dramatically as it's gone negative by a few quick things happening that provide the certainty that we're all looking for. And they're kind of obvious. I mean, that's the frustrating part for all of us. It's not rocket science what needs to happen. So I think that's the point about being an investor here. You can't make a 5 or 10 year decision based on what could really change in 180 degrees over the next 3 weeks or 3 months.
If you want to understand the philosophy that Warren Ingram is talking about, go back in our podcast, and you can go back months. It's about 2 months now, to Christo Visa, and just have a listen to him talking about how he has built considerable wealth. Private
jet kind of wealth.
2 private jets kind of wealth, and houses that you can only dream of, and a pad in Clifton, and businesses all over the world kind of wealth. About understanding that chaos is temporary. Then don't throw Zimbabwe at me, okay? That's not fair. Don't throw Zimbabwe at me. But South Africa context, Christo Visa, over the last 40 years, how has he built wealth? He's looked through noise. Sometimes the noise is real and you've got to pay attention to it. A lot of the time, it's just babble. Thank you, Warren Ingram.